You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means but one thing. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in this wild, wacky volatility market? Well, let's find out together. It is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from don't forget the front of the word, theoptionsinsider.com. Lots of great content there. Earnings vol, if you want to go deep into earnings vol this time of year, we get it. It's all available for you there, completely for free, because we like you folks over there. And then, of course, if you want more content in your lives, you want to go above and beyond, you don't want your broadcast week to end with Volatility Views. You want to come back for, let's say, I don't know, some amazing, unusual activity analysis like Options Oddities, or you want to hit our great Pro Q&As. We had Scott Nations on last week. He's been on a Pro Q&A many times. Our guest today has also joined us in our Pro Q&A sessions. You want to check out all of those 200-plus episodes waiting for you. The second you hit that button, only one place to go, theoptionsinsider.com/pro, to learn more as we learn who's joining us on the old Volatility Views program today. First, let's go out to the dark, stormy, turbulent shores of Maine. Who would live there? No sane person, listeners, except for one man. He is the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to Volatility Views, sir. How are things on the shores of Maine?
Actually, dark and stormy today.
See?
Just like they're supposed to be.
I called it. I willed it into being, sir.
You hit it on the head.
You're welcome. It's all I could say for you out there. And then also joining us for the first time on Volatility Views, Mr. Steve Sosnick, the chief options strategist over there at Interactive Brokers. Steve, welcome to Volatility Views, sir.
Thank you so much for having me, Mark. It's a real pleasure to be invited and joining you today.
You've been on our Pro Q&A a number of times. First time on VolViews, a little bit different audience here. So really quickly at the top of the show, for those folks who maybe haven't heard your previous appearances, give us a quick overview of your background in the option space, as well as what the chief option strategist does day to day over there at IB.
Well, my background is I started working primarily as an equity trader back at Salomon Brothers in the day. The old, if you read Liar's Poker, I was about a year and a half after Michael Lewis's training class, but that's how I started. I ended up trading warrants largely because no one else wanted to there. Same thing. My department moved to Lehman Brothers. I ended up again sort of trading warrants, prime scores, and so. After, I also went to Morgan Stanley. That was just strictly equities. But at that point, Timber Hill was hiring, and I didn't know much about him. But they were, we now I'll call it we're making a big push into equity options. We were index option traders primarily, and needed someone to manage the risk who had an equity trading background, but also understood options. And that was, almost, 29 years ago. I joined. We were, a nice little firm then. We've obviously grown. The business has changed dramatically. I manage the risk for this big options market making portfolio we had, as well as being an active market maker and specialist both in the U.S. and in Canada. As a firm, we exited the proprietary options market making business, but I had started to be the one person in the firm who was allowed to comment publicly about what was going on in markets and the options markets specifically. And so I added the title Chief Options Strategist. Actually, over the last year or so, I sort of ditched the options parts. I'm just Chief Strategist. But as a result, my day now is much more spent analyzing markets and talking to folks like you.
Always full of surprises, Steve. Who knew you came from the sexy world of equity warrants?
Even I didn't say I was a warrant trader. That's the crazy part.
Who knew? Don't get a lot of warrant traders. I love it. I love it on the network as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Let us do it. Let us dive right on into the volatility review, the portion of the show we break down everything that's going on this week and indeed today from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. We got another fun one in store for us today. If I had told you listeners at the beginning of the week, we would end this week with a surprise downgrade to our credit rating. And, of course, Apple can't move iPhones anymore. You'd think we'd probably be pretty firmly in the red to end the week. But nope. Once again, nothing can tame the bull out there. Coming into the final show of the week here, at least for you on-demand folks, listeners, S&P up about 0.75%, the Dow up about the same percent, the NASDAQ up over 1%. So some other rays of sunshine slotting in there, of course. We have Amazon blowing the doors off, so that's a little bit of good news out there. And then, of course, the jobs report maybe showing things moving to cool down on that front a little bit, so perhaps those two leading into the 1-2 punch that is lifting us. But you don't see a lot of days where Apple is firmly red and the rest of the market is green, listeners. As they always say, the market is uncomfortable when Apple is red, and Apple is pretty firmly red today, off over 6 handles, a little over 3%, trading right around 185 today. So you don't see a lot of days like that, but we're getting one today. It's a fun one. That means a VIX cash, all that fun upside we had earlier this week, all the stuff that Andrew and I were staring at, wondering, should we pull the trigger? Yeah, we probably should have, because 1460 when we kicked off the show. Still up nearly a full point from where we were this time last week, about 0.85. And who knows, the worm can turn. We can start getting back up there towards the end of the session. But right now, a lot of juice coming off the top. VVIX, the vol of vol, still frothier than it was last week, but we got up to triple digits earlier this week after that downgrade. Not quite there now, at about a 91 when we're kicking off the show. Still up about 4 points, but not quite as juicy, not quite as effervescent as we were earlier this week. VOLQ, same deal, up about 2/3 of a point, trading right around 1790 right now, but still down from the highs we saw earlier this week. We saw VIX cash top out around 1730, I believe, earlier this week. So we had a lot more vol to be found earlier in the week. Let's go around the horn. We'll start with you, Steve, as our guest. An interesting week, an intriguing week. What was catching your eye out there in the volatility markets this week, sir?
The spiky nature of volatility reared its head again. I think that, we'd kind of gotten into this complacent mindset, and it was very interesting because last Thursday, when there was sort of the rumors that the BOJ might might relax their yield curve control. It was very interesting because I did a TV appearance and I started talking to the host, back and forth just via email, and sort of saying, "Oh, VIX is like at a 12 handle." 2 hours later, by the time we sat down, it was about 14 3/4. And so what you learn in these situations is, VIX really, they come for it hard. The Fitch downgrade, I don't know that that's necessarily the end all be all. I think it kind of came about more because the bond market was freaking out already, because the Treasury said that we need to raise $1 trillion in the July to September period, when they previously said it was going to be $733 billion. Quarter of $1 trillion here and there starts to add up to some real money here and there. And so, Fitch came after that. And so I think that was kind of a 1-2 punch. But from a vol point of view, you do need to take profits when it spikes. But I think we're in the environment now where you want to be, if not loading the boat, you definitely want to be buying it back when you get down to levels where we aren't, sort of 14-ish, 13-ish. I don't think we're going to see 13 anytime soon, but we're closing up, a gap on closing a gap on VIX this week. Probably, I think at this point I'm trading it from the long side.
Steve, you discovered accidentally what we've known here for years on this show, which is you can't prepare for vol views more than half an hour to an hour ahead of showtime, because the vol market will turn on a dime. You could prepare all this fantastic analysis and data and charts weeks, days, hours ahead of time, and then forget about it. Throw it out your window come showtime, because something crazy is going to happen and the entire show will change. So this one, definitely one of the more challenging shows we have on the network in terms of preparation, because you just can't do anything, listeners, until about 5 minutes before showtime. But intriguing stuff nonetheless. Let's go out now to the dark and stormy shores, which are, I'm happy to say, very dark and stormy today. Mr. Rock Lobster, sir, again, a weird week. If I had thrown some of those data points I mentioned earlier to you at the start of the week, you would have been forgiven for assuming this would have been a pretty aggressively red week. VIX would be popping, and we'd see a lot of red on the screen from a broad market perspective. Yet, fast forward to Friday, and once again, stop me if you've seen this movie before, the markets are firmly green, and vol is firmly red heading into the weekend, sir. What say you?
Of course, I held my VIX calls yesterday late, like in the morning. I basically almost had a double on them. And I don't know what happened.
Don't even get me started. Don't even get me started, sir, on that.
and by the next time I look, they're like trading 125.
Yeah.
And then I'm like, and then it's the classic, well, they were trading 170. I ain't selling them at 125. Because I'm an idiot, right? I didn't put my stop in. I forgot. I'm doing all this other stuff at Option Pit. We were onboarding all these people, whatever. Well, I don't even remember. And because I think we had the market look really ugly for the first hour of the day yesterday, and then that was it. It was kind of felt like it was a continuation, and then and I ended up selling them for like $1.10. Like I scratched the calls. Maybe I made about 3 cents a contract. But I sold them because I'm like, okay, well, when you don't have, I think what our co-host just said, when you don't have a follow through, what are you going to do? Right? I mean, volatility, it has to stay bid, right? The one thing about an electronic marketplace now is they move these markets pretty fast. So anyway, and now we're trading at around a 1471. And if today closes here for VIX, and I've been watching this is like the rock lobster stat that probably has no meaning whatsoever, but I thought I would spill it out anyway. So since that yield curve control thing or whatever, that surprise that hit the market on Thursday last week, every day the low for VIX was always higher than the preceding day's low. So basically, VIX made higher lows for 6 straight days until today. So, when you're looking at, my general contention, like when I'm trading VIX just straight or vol straight, I don't like shorting it while it's going up. I've never found, because you can run out of money very fast doing that. So, and today would be the first day where we're actually going to make a low that would be lower than the previous day. So if we close here, I would say not bullish VIX, because realized vol is still 10% in the SPX over the last 30 days. It might even be 60-day vol might be as low as 10%. I have to look. I'm pretty sure it was down that low. Yep, 1037. So that realized vol can get VIX to around 12, 13 handle if we stay that way. Now, I guess the Fitch downgrade, I guess it wasn't as meaningful, I guess, as 10 years ago, because I guess everybody changed the language so they could still hold government treasuries after S&P did the same thing. I would have to say, though, that, if you're going to downgrade it, this is be a pretty good time to downgrade it, because it's got, the spending is ridiculous, and clearly nobody, President, Congress, whatever the Republicans are claiming is all crap. Nobody's minding the store when it comes to, nobody's making any hard decisions there in Washington. The hardest decision they're making is deciding what steakhouse they want to go to tonight. So I get that part. $1 trillion in interest. Again, I think anybody knows that that's not a sustainable path. So, okay, the market sells off a little, and we were at all-time, 1-year highs. So it was reasonable. It was, if you're going to find an excuse to sell off a little, that's certainly a good one. But VIX was never, the curve was never out of contango. The vol products still had a negative decay profile in them. The front end of the curve never backwardated. I don't think the 9-day ever was higher than VIX. So there wasn't that. They weren't coming for the short-term vol. And I think one of the reasons why, possibly, is that this might have put a bit of a lid on the market going forward for the rest of the year. That's kind of my thesis, because I saw some earnings in some of the more mainstream companies that I follow got kind of smacked. So, generally you can get a bid for VIX, a hard bid generally if you're expecting more realized vol or two directional trade. Okay, we can be up or down 1% today or 2%, in a real way. And that's when you get a bid for VIX. So I could see us getting back to the 13 handle next week and hanging out there for a while if there's no continuation, because like you said, if we're not selling off on all the interest rate stuff, treasury yields spiking, downgrade, Japan dumping the yield curve controls and letting, I guess rates fly or whatever. And Apple earnings are terrible. They're not growing. And they're at a $3 trillion market cap, but apparently nobody cares still. I guess we're not going down. But it sounds like a bull market. I don't know. Call me nuts. But I don't think we get a whole lot lower than a 13 number. I think that's we're not, again, I think we can maybe say this, but Joe Biden is not a 9 VIX president. We didn't think Trump was.
Now that you said that, we're heading to 9. You've invoked it now.
Yes, although Biden does have the dubious distinction of being downgraded both times while he was either the vice president or president. Not many people can say that, I think. So I don't know if he's going to put that over the plaque at the Biden presidential library or not. But anyway, so that's what we got. So from a vol point of view, do you really want to hold? Do you really want to hold at the money volatility right now in the S&P 500? I'm like, I could see a little bit. I could see a little more coming out of it, just because, again, we're not getting crazy follow through, and there could be now a little bit of an overhang, which keeps the market kind of ripping, like all those AI rips we had at the beginning of the year. Maybe we're not getting as much. And still earnings are still not, I would say, great. Amazon, their revenues are up, but they're still not making more money than they did in 2021. So like, I don't know why they're paying all this for the, paying what they're paying for these stocks, but they are. So it doesn't really matter what I think. But from a vol point of view, I think it's easy to VIX to get around the, the low 13s. But it is unlikely to stay there for very long.
Indeed. It looks like our live chat commiserating. Frank1209 says, I also failed to sell my VIX calls, waiting for another opportunity. I think I will get it. Options Queen says, I think that you'll get it too, Frank. So she's chiming in. She's usually pretty savvy. Yeah, I have an interesting tale to tell about my VIX fly that I put on this week, a call fly. I think we'll get into it more on Options Oddities when we're breaking down kind of some of our trades from the week. We always say it on this show, the upside is short-lived, take your moments. I looked at it square in the face earlier this week, and I thought, you know what, I think we might have a little bit more wiggle room to the upside. So we'll see. I'm not entirely regretting my choice, but I did look at it long and hard and said, usually these things are short-lived. But I constructed my fly in a way to, try to take advantage of a little bit more upside. So we weren't quite there at the level that I put it on for. So we shall see. We shall see, listeners. Intriguing stuff. I think, Frank, you might have another bite of the apple. We shall see. We shall see out there as we keep on rolling. Speaking of seeing stuff, let's go see what's cooking out there on the vol surface this week. And spoiler alert, we are up, but slightly. I'm sure if I re-racked this now partway through the show, we might even be flat. But as we kicked off the show, we had that front portion of the curve, that AUG future, up nearly half a point, and the SEP future up about 1/3 of a point. Still looking at a decent gulf between the cash and the AUG future, but that has come in. It was well over a point last week. Now it's down by almost exactly a point out there. So it's starting to come in ever so subtly out there. Steve, we'll start with you, sir. Are you a big watcher of the volatility surface? And if so, what's catching your eye out there this week?
I do watch it, and particularly in times of stress. I mean, to me, one of the big tells is backwardation, and we're nowhere close to it. We're in a pretty steep contango. A lot of that has to do with the fact that we have higher rates than we're used to. So the contango seems a lot steeper than what we're used to, which is part and parcel. But it is something I look at closely because VIX. For all the talk of zero-dated options, taking over, VIX is still the way that institutions use, the vehicle that institutions use to hedge major exposures. You simply that's the way to do it. That's the way this complex has evolved. As a result, you're still seeing the contango, which is the most basic way of telling you that supply and demand is in balance for volatility. When it starts to flatten, or of course when it inverts, that's telling you that demand is outstripping supply, at least in the short term. That's when things get panicky. Even, as you guys noted, it didn't get truly panicky even when we spiked, which was indeed a tell. And quite frankly, that's one of the tells for when you take, do we take the profit now or do we let it ride? I've always tried to stay fairly disciplined about taking profits when they come up, assuming that I don't really need the hedge. Assuming that this is a trading position, not hedging a larger portion of the portfolio.
Mr. Rock Lobster, same question for you, sir. What is catching your eye out there in the volatility futures this week?
I think so. So by the option pit. Theoretical value calculator that we have for VIX futures. Today, like literally everything is about fair and normal for this amount of time in the cycle. So just for people that were curious, so what we did is, we took a sample of volatility over the years where the VIX futures were, and kind of basically calculated an average forward vol. We drew a line to it. And then when the VIX deviates from it, because that's not basically normal when VIX is 12, anytime like there's more, the future premium is a little higher than where it, let's say, is on average or lower. That's just, we want to know when it is, when the market's paying different prices for the different terms. So right now it is literally about as there's literally no blinky red or blinky green on my screen for the first time in a while. It is as normal as it can be for this amount of time to August expiration. So it is like again, Steve said, it's a steep contango, but that's a very normal condition, especially when you have, when you just stack up the vols. Realized vol is 10%. 9-day vol is 1298. VIX 30-day 1479. August future 1590. September 17. Right. So literally from the September future down to the current realized vol, that's 7 handle premium. Pretty normal, right? Pretty normal. So it's not like there's no vol. The market is still charging pretty good amount of money if you want to buy volatility in August or September relative to how the S&P 500 is trading. You're paying a pretty penny for any of that stuff. So and it's totally normal. So I would just say, as crazy as it is, for the news that's coming out, you have a very normal curve. And, we could say, like, I can't believe the market's not going up when Apple's not up, when Apple's down $5 or $6. You can't believe the market's up, but it is. And volatility is saying, hey, there's no appetite for anything else. And that's what we have. So, I think overall, though, we're going to see, even it feels like if we really don't get any pop on the upside, I think that's what'll end up driving VIX lower, because we're not getting that we're not getting the at the money sort of stretched up anymore with those 1-2% rallies. And I think that ultimately, if anything's going to kill the vol, it'll be that. And I think that's the biggest over the last week. There's a little bit more wet blanket on top of equity prices from that. So, but that's what the curve is. It is annoyingly normal looking. That's what I would say.
What fun is it if there's no blinky red or green lights? That's what we're here for. We're here for the blinky red or green lights. Normalcy. What fun is normalcy out there, Mr. Rock Lobster? As we keep on rolling, let's see if we can find any fun out there in the land of big VIX options. And you know what? Today, looking respectable, I would say, all things considered. Right around 356,000 contracts on the tape, so closing in on halfway to our ADV, which is looking a little bit more respectable now as well. It's up to 762,000. It's up 71,000 contracts from this time last week. Surprise downgrade, a few other things will do that. They'll gin up some volume numbers. We were looking like we were going to break 600K in the wrong direction this time last week. So the volume ticking back up. And again, we are in August right now. This is seasonally usually a pretty weak time for volume. And yet VIX holding up close to 800K a day. That's nothing to sneeze at. Let's break down our top 10 size positions. What is open for size out there right now in VIX land? Let's find out together. If you were looking for a little bit more on the put front, listeners, keep waiting. We're still at 8-2 calls over puts in the top 10. There will be no evolution out there, listeners. It costs you 211,000 contracts to break into the top 10 right now. So that is pretty decent for VIX land. Usually we see it at $160, maybe $180. 211 is nothing to sneeze at. That's because there's nearly 14 million contracts open out there right now. So VIX looking pretty dense from an OI perspective. That 211,000 contracts, the number 10 spot, that gets you to the Jan 47 halves. An interesting strike to kick things off. Number 9, 228,000 of the AUG 25. So back to, dare I say it, some shade of normalcy. Number 8, 234,000 of the AUG 21s. Then number 7, our first of 2 puts to be found on the list this week. Number 7, 239,000 of the SEP 13 puts. Number 6, 245,000 of the AUG 60s. So right back at it to the upside, listeners. Number 5, 253,000 of the NOV 47 halves. So a little bit of 47 half action out there this week. Interesting. Maybe some calendar fun to be had out there. 47 half. You like that strike, listeners? Number 4, about 250,000 as well. 257,000 of the AUG 22s. Number 3, our second and final puts in the top 10 this week. 264,000 of the SEP 15 puts. Number 2, 291,000 of the AUG 20s. And the big dog out there, 325,000 of the SEP 60s. Remember, they are one half of that 1x3 we talked about a couple of months ago now here. Intriguing stuff as we're going on into the rest of the week. An intriguing week. Like we said, today, looking kind of normal. 356,000 contracts on the tape. The big dog today are the SEP 15 puts, 31,000 of those, followed by 30,000 exactly of the AUG 60. So those continuing to trade. Number 3, 28,000 of the SEP 30s. Number 4, 22,000 of the AUG 15 puts. And rounding out the top 5 today, 16,000 of the SEP 17 puts. Looks like something funky went up today. Looks like a bit of maybe a risk reversal out there. SEP 15, 17 put spread versus looks like some of the 30 calls, but they also got the 17 calls as well. So we got some funky action that went up. It's like 25,000 by 25,000 by about 10 by 10. So intriguing ratios out there. But we got some funky stuff going on out there, which is driving up the numbers. We were at about 250,000 contracts right before showtime. So about 100,000 contracts flying in since we started talking. Yesterday, though, was when the contracts were flying a little bit fast and furious out there. We had 903,000 contracts on the tape yesterday. The big dog yesterday, our old friends, the 47 halves in November, 75,000 of those bad boys taking the top spot, followed by number 2, 62,000 of the AUG 14 puts. Number 3, almost 50,000 of the AUG 18s. Number 4, 40,000 exactly. You never see that. You usually see 40,001, something like that. 40,000 exactly of the February 45s. Interesting. That's the first Feb we've seen for size to the upside in a while. And number 5 yesterday, 37,000 of the AUG 20s. Wednesday, the big day. This was, of course, downgrade day. Over 1.5 million, 1.55 million contracts going up in VIX land. One of the busier days we've seen in quite some time. The big dog on downgrade day, 151,000 of the AUG 14 puts, followed by 128,000 of the AUG 15 puts. So maybe folks were getting the hell out of Dodge on all of those puts. Looking at these, they were going up mostly mid on a lot of these. So maybe they decided, the downside was done for a while. Of course, if they had waited, they would have been right back at those strikes. And 102,000 for number 3 of the AUG 16 puts. Or maybe they took advantage to get fire sale prices and gobbled up all those puts. Either way, ton of puts going up on Wednesday, which was probably not what you thought. Number 4, 82,000 of the AUG 14 half puts. Got to go all the way to a distant number 5 to find the first call on Wednesday. Yes, less listeners. 59,000 of the AUG 18. So on a day when we're downgraded, market's selling off, vol's popping, nobody wants to touch a call. Intriguing stuff. Tuesday also pretty heavy. 746,000 contracts on the tape. The big dog on Tuesday, 36,000 of the NOV 42 halves, followed by 36,000 for number 2 of the October 38. So all kinds of funky strikes lightening up on Tuesday. And here we go, 36,000 for number 3 of the Jan 47 half. So we've got some interesting strikes making it into our top 5 listeners. And then number 4, 33,000 of the SEP 60s, and number 5, 33,000 of the Ds 45s. And then Monday, kind of the light day of the week, 490,000 contracts on the tape. 57,000 for number 1 of the AUG 16s, followed by 44,000 for number 2 of the AUG 19s. Number 3, 32,000 of the AUG 13 puts. Number 4, 25,000 of the Jan 20 calls. And rounding out the top 5 on Monday, 20,000 of the NOV 19. So we kind of have a representative sampling from across the board this week. We got AUG, we got NOV, we got February, we got September, a lot of August as expected. Intriguing stuff out there. Steve, I know you guys have the old vol lab over there at IB, so you're always looking at and analyzing and crunching the vol numbers for a lot of your clients. Anything catching your eye out there in the world of VIX options this week, sir?
Well, I think the fact that there's so much activity in what I would call like true disaster calls just is mind-boggling. That to me strikes me much more as, risk management, like, okay, we're portfolio proofed, but realistically, I while you were going through that, I pulled up a chart, and it's pretty rare for VIX to get up to 47.5. 1, 2, it didn't even make it a couple times. It's probably 3 times. I'm just scanning the chart. 3, maybe 4 times we got up there. Now, when you get through there, you go to about, you can. In 2008 and 2020, you got up to 80, 90 level. But realistically, I don't think that unless you're hedging this giant risky portfolio of stocks, or actually to some extent high yield bonds, I don't see the point of those trades really for an average individual. They don't make a lot of sense to me as a practical matter. I think if you want to, you can get plenty of hedging and with much lower strikes than those, and that's the one that really, a 60 really, that there's not a lot of utility to that. I mean, for example, as I'm looking here, you got in 2010 and 2011, 2015, we got up around 47.5. But unless you're super nimble and sell them there, even if it closes at 47.5 and you own the 47.5 calls, well, they expire worthless. So it's an interesting trade to hear all these extreme wings being as popular as they are. I think that's sort of maybe a risk manager in an office somewhere telling a portfolio manager, get some hedges on, get some black swan hedges on. But to me, that's not a very practical way to do it. I think if you want to buy insurance, I think you want to be a little bit better off there.
You would have hated the show last year, Steve. It was nothing but par strikes and above as far as the eye could see. 110s, 115s, 125s. It was as if the entire trading world just discovered garbage VIX calls all at once, and they wanted to put them all on. It was insane. Go check out some episodes from about a year ago if you really want to scratch your head.
I will. To me, that was when you had the big inversion. You talk about the vol surface. You have the big inversion there, and what happened was people were caught by surprise in January of 2022. Everybody was all bulled up. The market was, we were going, we had touched new highs. Everything was great, and then poofed, and people were caught off sides, and that's when you get the big inversions. That's when you get the panic in. That's where it's like, buy me. I need any VIX call I can get my hands on, and that doesn't, that to me isn't a practical way to do it. First of all, you want to buy insurance before the fire is kindled, which means, and I think of it this way. We all have, homeowners insurance. We have fire insurance. I don't want my house to catch fire. As a matter of fact, I'm really quite happy if I write that check every year to the insurance company and it's never used. That's money I really kind of enjoy flushing down the toilet. And I wouldn't say that should be your approach to hedging with volatility. But if you are really hedging, if you're really buying insurance, you don't want your insurance contracts to necessarily pay off. Now, if we're trading it, that's a whole other story. But so to me, that's the part that doesn't make a ton of sense, because the people who are doing those trades are basically buying insurance on a large portfolio. And it just seems to me to be, you don't want to do it after you realize, after there's a wildfire, in your community. Of course it's going to be more expensive to buy it. And also, what are you insuring in that situation? It just becomes very difficult for me to understand that rationale. But the more important message is not necessarily buy disaster insurance all the time, but if you do think that, when the premiums get relatively low, it's generally a better time to buy insurance than when they're not, for good reason. Remember, this is the only options market's the only insurance contract where you can assume moral hazard. Any place else, they won't let you do it. If you've got if you have a reason for something to go bad, if you're an arsonist, no one's going to sell you a fire insurance policy. But to a certain extent, the options market doesn't care. You can buy insurance no matter what your status, no matter what your ethical standards are. It's agnostic that way, and it's very different from other types of insurance.
I never thought of it that way before. The options market, fire insurance for arsonists.
That's maybe not the slogan.
Let's put that on the brochure, the risk disclosure document. Fire insurance.
Just all of a sudden I heard IB compliance just jumping.
I'm not. That is not an endorsement by any means.
I think we have our title for the episode now, listeners. There we go.
No.
Mr. Rock Lobster. What are your thoughts on that? The options market, fire insurance for arsonists. That's a good use case. I like it. I would click on that episode. How about you?
To me, so Steve doesn't get in any trouble. But I think that is apt. And not only that, you can go around and you can go buy it whenever you want. One of the questions I get from my students is like, do I have to wait to exercise my option to get this? I go, no, you just go sell it as soon as the market opens and you're good. I think, I think the upside, I think a lot of that upside stuff is, probably, Amberson, I know he likes to play around in that. I like that type of trade because I do everything backwards in VIX. I use all the puts to finance the upside. And I don't write the puts, I buy them. So, of course, you got to sell the calls when they're paying, but we will commiserate on that at Options Oddities. We'll rename that show Two Knuckleheads that have been trading for 40 years.
Don't take their own advice. And I think the worm's turning a little bit. I think we shall see what other shoes have had to drop. But anything else catching your eye in VIX options before we roll on out to the ETP, sir?
No, I mean, there's a little more action in the downside puts, but what I would say, though, surprisingly, just not as much as I would think, given the little vol rally we had. Just the last month, there was a little bit more demand for, let's say, like the 13s and the 12s. I mean, they're coming for them today, like the 14 puts are 16 cents for August expiration. It's not a terrible price, I have to say. Given where I think VIX could go in 2 weeks, because we still have a week and a half of the cycle. We just have to get through, obviously, the CPI number again, which should probably be the last, at least for this August cycle, probably the last calendar vol event that we have before we move on to the other stuff. So there is some put action, but I think a little less than I would have expected for the pop that we had, which lends a little credence to Steve's idea that, maybe we don't see a whole lot more downside out of VIX.
We shall see. Right now, we're seeing it looks like a little bit of downside coming back. Maybe some of this bloom coming off the rose of our rally today. We were up about 0.75 of a point in the S&P, 3 percentage point, of course. Now we're up about half a point. Maybe it's getting some of that back. We'll see. These things tend to turn on a dime sometimes. So who knows? By the time we're talking on oddities later on, we could be in the red. We could be up over 1%. Who knows what's going on out there? Let's get on out to some of the ETPs you folks know and or love and or hate out there, listeners. Let's get out to SVIX 2840, so it can go down. Wherever he is, Mr. Once and Future Dr. VIX, probably a little sad right now. His chief holding finally turning down. He can't be mad, though. He's had quite the run on SVIX this year so far. 2840 right now, down a little over a point, about 1.3 points on the week. Obviously, it got lower earlier in the week, listeners, as we saw this nice little pop. We got down to about a little bit shy of 26, about 25.96. That was yesterday, so well above that right now. We'll see if we can keep these levels or start moving in one direction. Not a lot of paper out there today, a little under 1,000. The ADV is moving in the right direction, though, 2,400 contracts. It's up about 300, so not a ton to write home about there. The big dog positions out there in SVIX right now, 2,215 of the SEP 10 puts, followed by 2,155 of the AUG 9 puts. So funky put strikes. And then, of course, my favorite still, 1,310 of the SEP 35s. Those are looking a little better last week than they are now, but still far better than they were when they first went up, and we were all joking about them here on the show. So intriguing stuff. It's not a lot popping off there. Let's go out to its sibling product as well. UVIX, that's at about a 4 handle, so that can go back up about 1/4 of a point. Same deal as SVIX, though. It had more of a move, obviously, earlier in the week. It got up to 4 3/4, so I guess that's what they're waiting for out. They're waiting for the market to reverse split it for them so they don't have to do it. Either way, finally seeing some paper out there. 9,500 contracts on the tape. That's not a lot, but compared to the ADV, which is 8,500, it's actually looking pretty robust. And that's up about 1,300 on the week. So UVIX just goes to show you a little bit loftier valuation, and people will actually trade this thing. The big dog today, we got 1,100 of the AUG 4 calls expiring next week. So looks like paper probably, let me look really quickly. I'm going to guess they probably, it looks like they overwrote them for about 20 cents. You like that, listeners? Overwrite in the 4 calls. They're taking whatever bid they can get in UVIX and blasting the hell out of it. I guess if you're buying this vol sell-off, then I suppose that's the way to go out there. The big position in UVIX right now, 4,800 of the SEP 3s. So intriguing stuff out there. Since we're kind of come up against it, let's roll in UVXY as well. 17 even right now, up about 1/4 of a point on the week. Of course, this one got higher. Actually, it's up now about 17 and a quarter. So it's continuing to tick up. So that puts it up about half a point on the week. Earlier in the week, it got as high as about almost 1983. So this one getting back a lot of its reverse split juice and then giving it all right back over that was yesterday. It was nearly at 20, listeners. So this thing's come off over 2.5 points in the span of 24 hours. That's a lot of juice coming out of UVXY, listeners. Wow. Today we have about 110,000 contracts on the tape, listeners. So a pretty robust day out there, especially when you consider that the ADV is only 86,000. That's up 18,000. So again, these products having a little bit more value to them and a little bit more erosion to capture. Go figure. People are actually going to trade them. So decent paper out there. The big dog position in UVXY right now, 28,000 of the SEP 8s. So followed by 27,000 of the Jan 55. So UVXY options all over the place. Steve, how much attention do you pay to the land of volatility ETPs? And I just ran through 3 of them, SVIX, UVIX, and UVXY. Anything catching your eye out there in either of those this week, sir?
I'm going to admit I really pay very little attention to them. I don't like ETPs that have inherent leverage. If I want to lever up, I'll do it myself. And I think that's probably, if you've got a sophisticated audience, I'd prefer that they went in that direction, because you're buying someone else's decay, or you're buying someone else's roll. And so there's a reason these things reverse split, and there's big red letters in the portfolio. At least they used to be in red. Now they're back to, I think, bold or just more quiet, but that these products, systematically underperform over time. They match the daily. They try their best to match the daily moves and do an okay job of it, but over time they erode. And I don't like to own eroding assets. So that's my little editorial right now. I'm not a big fan of them, and I think in the case of volatility, your listeners should be able to construct volatility portfolios on their own that probably are better suited than just sort of the approach of buying and particularly a levered ETP.
We call them Franken products here on the show, Steve,
okay.
And not without reason out there for all the reasons you just laid down, and many more outside of that. Let's keep on rolling. Let's add in one more. Some might say the chief of these Franken products, at least it used to be, kind of a pale shadow of its former self. In fact, it is the subject of our question of the week this week. It is VXX at about a 24, so getting about half a point back, continuing to move to the upside. So maybe some of that signaling that maybe some of this worm is turning now out there. We shall see. 87,000 contracts on the tape today as well. That's not nothing, because the ADV is only 81,000, and that's up 7,000 from last week. So the volume moving in the right direction out there in VXX land. The big dog position in VXX right now, 33,000 of the AUG 22 puts. Mr. Rock Lobster, anything catching your eye out there in the Vol ETP universe? Your big friend VXX or UVXY or UVIX, and we'll even throw SVIX in there, sir. Why not?
Actually, for Steve, he would like, because we call those products reliably crappy.
Yes. Yeah.
So I that's the less politic way of saying what you were trying to say with the leverage idea. As far as volume goes, I have been dabbling a little bit in the SVXY product. I think the volumes are, again, like for a trade, short-term trade, I think they work okay, depending on, what you want to do. And I know Russell loves SVIX because he'll just think that's going to go up forever, and it probably will to the day it doesn't. But as of right now, I'm just noticing a little bit more volume. Now, obviously, VIX going from 13 to 16 or whatever, some volume picked up in them. And I like the inverse ETFs as a bounce. It's kind of their fun bounce products. I try to ignore them when they're just sort of going in one direction. But yeah, I just, again, seeing a little bit of volume, but not a whole lot to speak of in those products. I guess the only thing I will say, though, is like UVXY, we're just waiting for that to resplit again, because it is quickly losing value as fast as possible.
That it is indeed. We'll come up against it, listeners. Let's go really quickly into the Vol voicemail so we can pay off our question of the week.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you folks take the reins, your questions, your comments. You also get to sign off and chime in on our question of the week. And this week, it dovetails nicely what we were just talking about. This week, we're asking you, VXX, I think to put it mildly, had a rocky year last year. Are you trading it again, or have you moved on? Gave you 4 choices. Yes, I never stopped. Yes, they lured me back in. You're like the Godfather. Just when I thought I was out, they pulled me back in. Or no, I don't trust it. Or no, I trade other products. Steve, I'm guessing you don't have a dog in this fight because you don't like them. But what do you think our audience is voting for? You think they're trading VXX again, or are they back out?
I'm going to say they're back trading it again. The spike, a spike like we've seen probably draws people back into trading it.
That could very well be. Mr. Rock Lobster, what are you saying on this one? You saying our audience is, yes, they never stopped, yes, they lured me back in, or no, I don't trust it, or no, I trade other products?
There's so many choices here. So of course, it lured me back into trade on a much shorter term basis than it used to be by a factor of 6 months or something. And I think that they have found other products to trade. That's what I'm thinking.
That is the case right now. 41.9% of our audience saying no, they trade other products now. So they are done. They have washed their hands of VXX. Once bitten, twice shy. Can you blame them out there, listeners? 22.6% saying no, I don't trust that. So you add that two together. You're talking closing in on 2/3 of our audience saying, nope, they're done with VXX. 19.4% saying, yes, they lured me back in, and bringing up the rear, as I hoped, yes, I never stopped, 16.1%. Intriguing stuff. Speaking of intriguing stuff, listeners, I can delay it no longer. It's that time of the show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the most difficult, the most dangerous portion of the show. Steve, I hope they prepared you, because we're getting into it now. This is where we attempt to figure out what the vol gods hold in store for us for the coming week, listeners. Last week, it was myself and the greasiest of meatballs and Scott Nations. And because Scott was on and VOLQ is his product, we also threw VOLQ into the mix. And right now, coming into the end of the show, VOLQ is pretty much exactly at an 18, and VIX is almost a 15, about 1490. So VIX getting a little bit of froth, a little bit of juice back here to end the show. I was at 1335 out there for VIX and 15 double for VOLQ. So obviously, I was not feeling this surprise downgrade that we had out there. Mr. Meatball, a little bit closer. He was at 1441, so he was within half a point, not within our 10th of a point margin of victory, and he was nowhere close. Oh, he was on volley. He wasn't on VOLQ. He was on volley of 1221. And then Scott was at a 12 3/4 on VIX. His volley, one of his vol measures, listeners, 1180, and VOLQ 16 1/4. So long way around to saying no joy for any of us. I'm looking here really quickly. Yeah, I don't see any of our listener submissions from the chat or after the fact. I got a couple of 14 handles, but that's about as close as it gets. Our producers will go through all the submissions, listeners, and see if anybody was close. If you're within our 10th of a point, listeners, winner, chicken dinner for you. Who won last week? I forgot the name of the list. I think it might have been Nichols, but congratulations to our winner of fabulous prizes last week. Steve, a long way around to saying that means no winner last week. That means our guest, you get the dubious honor of going first, sir. What are you feeling for VIX this time next week?
I'm going to go with 15 3/4. The rationale being, and I may be a little early on it, there are 3 months of the year where the average return on the S&P 500 is lower, or at least over the past 25 years. And that is in order, September the worst, February the second worst, August the third worst. There are 3 months where VIX tends to end the month higher, August being the month that is the best month for VIX historically. Part of that is, if September is bad, wouldn't you want to own a product that looks 30 days ahead, and 30 days past August is September? So I've got a definite upside bias on VIX. I also, I'm looking around and just sort of thinking the market seems a little tired. I'm going to go 15 3/4, and I think we'll actually see numbers higher than that during the week.
Interesting. I wouldn't hate that, Mr. Rock Lobster, sir. You went on the show last week, so you get to go next. What are you feeling for this time next week?
Yeah, I can't disagree with them. I don't know if I'd go. I think we're going to be flattish. There'll be a little noise next week, but I'm going to go with a prevailing trend that I can't believe the market just keeps going up, but it keeps going up. So I'm going to say, I'll say 15.25. 15.25.
That's funny.
So I'm not scumming him. I am still a half a point away.
Yeah. Which, by the way, as I have my trader workstation up, it is 15.23 now. Since we've started this discussion, VIX has popped a little bit.
Yeah, it's ticked up like half a point.
We have juiced it up.
Exactly.
As you were talking, Mr. Rock Lobster, I wrote down 15.05. So I had a 15 handle in my outlook as well, but barely making. Of course, I wouldn't mind seeing any of these upsides lighting it up. What are your thoughts, listeners? If you're listening after the fact, as I know many of you are, get your submissions in before the end of the day today, so the day the podcast goes live. Otherwise, it's not fair if you're guessing next Wednesday for vol next Friday. That's no fun. Guess today like the rest of us if you're within our 10th of a point margin of victory. Fabulous prizes will be yours. Unfortunately, no more show will be yours today, unless you're hanging out in the pro, in which case, hang out there. The Rock Lobster and I will be back on Options Oddities in a little bit to break down all the weird trades we saw this week, all the weird trades we put on this week, including the ongoing saga of our VIX upside. What will we do with that? We'll find out with that in a little bit on Options Oddities. If you haven't gone over there yet, theoptionsinsider.com/pro, the place to go to learn more. We got a lot of trades to talk about this week, so that should be fun. But before we go, Mr. Steve, if folks want to check out all the vol content and analysis you guys have over there at IB, where should they go? What should they do?
Thank you for asking. IBKRcampus.com is our research, is basically a research or educational. It's all there. That's where we want to educate people. And I have a dedicated page on there, which is easy to find because I publish something pretty much every day that I'm working. I try to do something on the site. So you could follow it. You could subscribe for free to the daily letter that we send out, which is not just me. It's a wide range of internal and external research providers with a range of opinions. So we call that Traders Insight, but it used to be IBKR Traders Insight. It now falls under the IBKR Campus banner. And I'm on Threads. I got to admit, I don't really use it. I'm still on Twitter /X at Steve Sosnick. And please feel free to follow and start a dialogue.
There you go. And is the Vol Lab, is that now part of the campus? Is that all rolled into one?
It's all sort of rolled in there. Yeah, the volatility education, all that stuff is part and parcel now of IBKR Campus. We just figured it was much easier to send people to one specific place and then let them go through. There's if you read through I'm reading through the banner. It's home, it's courses, it's news, it's quant. So there's a whole bunch of there's webinars, there's podcasts, there's a trading lab. There's a whole. It's all branded under there. So that's really the place to get started.
There you go. Check them out over there, IBKR Campus listeners. And Mr. Rock Lobster, if they want more specific vol learning, where should they go? What should they do, sir?
Well, you can come over to optionpit.com or go to Weekly Profit Cycles at Money Map Press. Again, but if you go to Option Pit, you get 10% off anything we have there. If you say you listen to this here show Ask Our Customer Care team said Andrew said so, because this is the only place where you can get that deal by listening to the Options Insider Radio Network. We've been doing this now with you for a significant part of my life at this point, it would appear. So, but we enjoy it and have fun. So there you go. Everybody have a good weekend.
Have a good weekend. That will conclude the On Demand Network for this week. Hope all of you had a good, a fun, a profitable, a safe trading week. Again, if you're hanging out in the Pro, we'll be back in a little bit to break down the entire week from an options oddities perspective and talk about the crazy trades, the flies, and everything else that the Rock Lobster and I put on this week and probably took off as well. Then back again, of course, on Monday. Another episode of the Option Block all the way through to next Friday and another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.